Okay, so we're going to start with Kate McBean, who stepped in for Darren at short notice, but also works for EcoFund, and is going to talk to us about the scope for private investment in ecosystem service markets, so getting outside of recycling government funds that were previously in grant schemes, but looking at who are the other investors and what are they experiencing.
So first of all, I'd like to say apologies from Darren. He's been a little bit sick and wasn't able to make it. He's asked me to come on his behalf, and I work in Darren's team, in the biodiversity and carbon team of EcoFund Queensland. And we were set up by the Queensland Government about 2 years ago to establish the carbon and environmental offset markets, particularly in Queensland, but we're also looking at operating in other states. And we've also been one of the vehicles the government has set up to increase the protected area estate in Queensland to 20 million hectares by 2020. So we've got a lot of work to do. We're currently at about 12 million hectares, so we've got about 8 million hectares in the next 8 years or so. So what I'm going to be looking at today is, as Patrick said, so private investment in ecosystem services markets. And I thought Jim's question earlier on today about are we moving away from a reliance on government funding was very topical to what I'm going to talk about. I'm going to focus particularly on two ecosystem services markets, carbon forestry and environmental offsets. And from my perspective as an environmental offset broker, I do see a move away from government funding and into the private sector for natural resource management. So the things we're going to be looking at is the regulatory requirements and policy initiatives within those two areas, carbon forestry projects and environmental offsets. Landholder benefits, although after Philip's presentation before me, I might skip over that because his is probably a little bit more comprehensive and was fantastic actually. Really want to focus on some of the challenges of private investment in the ecosystem services market, so I'll try and focus mostly on there, and we'll also look at a case study that we've worked on in relation to the Environmental Protection and Biodiversity Conservation Act. So the two key areas, as I said, are the carbon forestry projects and the environmental offsets. EcoFund has been operating both within the voluntary market and the regulated market. The voluntary market so far in carbon forestry projects and a regulated environmental offset market. We have two areas of business within EcoFund Queensland, the carbon and environmental offsets. We also have a small advisory service. The most stable and consistent of our business units has been in the environmental offsets because it's been regulated. Within the carbon business unit, we have seen fluctuations in businesses, and the delivery of projects has kind of been a bit stop and start, trying to get our heads around what's happening with the policies. So the carbon forestry projects that we get involved in are predominantly carbon farming initiative will be a big player for us. Carbon pricing obviously will be funding a lot of that, and the future emissions trading scheme. Environmental offsets, so the EPBC Act's draft policy statement, use of environmental offsets, and we also operate under state and territory offset policies. We're increasingly seeing a growing number of local government offset policies. We haven't actually had to implement any offsets under those policies yet, but I think it's going to become more common practice as local governments get involved in that area as well. So I won't talk too much on this either, as Eliza's already covered most of it, all of it actually. So Carbon Farming Initiative is an offset scheme to provide new economic opportunities for farmers, forest growers and landholders, and help protect the environment by reducing carbon pollution. The areas that we think are of most interest for us and for private investment is in reforestation and revegetation, and also some opportunity with avoided deforestation. We'll talk a bit more about that. So eligible biodiverse carbon forests can mitigate the impacts of climate change through revegetation of cleared landscapes, which is probably the most expensive option, and we've done a pilot project based on what we thought the policy would be, and that's definitely been the most expensive project that we've implemented. But if we go down the path of the re-establishment of wildlife habitat through managed regrowth, then that's an alternative, cheaper option for private investment in these kind of markets. So you need to look at those costs. Then you get these additional benefits, so improvements in water quality and also increasing connectivity across the landscape is another additional benefit that can be derived from those carbon forestry projects. So this is an example of a project that EcoFund implemented last year. It was based on the Queensland Government's Reverse the Effect program, which took donations from everyday people to offset the emissions from their vehicles. And we developed this program, which was the revegetation of endangered and of concern riparian ecosystems. And it also enhanced habitat for species such as the Mary River cod and the giant barred frog. So it was those blue areas that you can see along the creek line there. That was where we were doing the revegetation. It's still currently underway, actually. We haven't planted all of the trees. But it was a really good opportunity for us to understand how these projects play out on the ground and all the implications and challenges involved in actually getting trees in the ground and then trying to make them eligible under what we thought the policy would be. And in retrospect, we believe that this project would be eligible for carbon credits under the Carbon Farming Initiative. However, it's already been used to offset emissions through the Reverse the Effect program, so it won't be selling credits to the market. So this is what I was talking about a little bit earlier. It's a cheaper project that we got involved in up in central Queensland, which is the management of regrowth, and in this case it was the management of brigalow, which is an endangered ecological community under the EPBC Act. This has the potential for large-scale, low-cost biosequestration in areas with high levels of historic land clearing. So it's more than just your usual management practices. It's really enhancing the management to get higher sequestration rates, and we believe that it's a really good option within Queensland to achieve those higher sequestration rates at a low cost. And the Queensland Government is actually currently looking into developing a methodology for CFI managed regrowth projects. Environmental offsets is the area that I work mostly in. I'm an environmental offset broker, so I'm kind of at the interface between the private sector, the regulators and the landholders, and also have direct contact with land managers and all the third parties that are out there on the ground doing the work. So what is an environmental offset? It's an action taken to counterbalance unavoidable negative environmental impacts that result from an activity or a development. In theory, environmental offsets should exist within a framework of avoid, minimise and then offset. It should be the last choice. I don't think we've always seen that in practice. I think more commonly offsets are being used by governments to allow developments to occur, but that's a personal opinion, so I'll leave that one out of EcoFund. It's often required for activities such as infrastructure, mining and resource extraction, and also urban development. We've seen a lot of small residential developments are now being captured at the state level in Queensland. It's usually direct land-based measures, but we're also seeing offset payments are becoming more common in Queensland offset policies and possibly also at the local level, which is an interesting alternative because direct offsets are quite complex, expensive, difficult to achieve, whereas an offset payment is easy to procure. You can pool the money and get better environmental outcomes, but you lose that like for like that you would normally get with a direct offset. So essentially offset payment, the money is pooled together and we go and buy national parks. So one thing that we're looking at in Queensland is we've set up a trust called Balance the Earth Trust to collect offset payments. We're looking at our future protected area estate, what we want it to look like, and could these offset payments go towards that? So that's an alternative to a land-based offset. So yeah, I've already kind of talked about that. It protects at-risk environmental values. supports restoration of degraded ecosystems and restores habitat for threatened species. We try to strategically locate our environmental offsets so we get connectivity, or we're assisting to enhance connectivity between the landscape. Most offset policies operate under a number of common principles. So the avoid, minimise offset framework that I talked about before, and usually target the like-for-like outcomes through a direct offset. They aim to achieve a no net loss or a net gain, depending on the ratio that's applied. There's options to develop a package of actions, which may include direct and indirect offsets. So indirect offsets are things like investing in research and development in particular areas. And they also deliver additional outcomes that wouldn't otherwise have been achieved. And that's important, and Eliza talked about that this morning, the concept of additionality. It has to be something that would not have otherwise occurred. Otherwise, you're not getting that additional outcome. They should be located as close as possible to the impact site, legally secured on title, actively managed for a period of time, and monitored and reported on. And that's a bit of a grey area, I think, at the moment, and will be interesting to see in the long term how these offsets are actually monitored and reported on, and how we measure them to see what if they've met the objectives and if they've achieved that no net loss or a net gain. It's an area that probably needs a little bit more investigation. Landholder benefits, I'm going to skip over that because Philip's already talked about some of that stuff. The main thing, I think, for landholders is that it's an alternative for them to traditional income streams. It gives them an option to do something else if those traditional sources aren't working for them anymore. But we see in Queensland that the participation rate in offsets is quite low. It was very interesting to hear Philip's discussion about the results of his survey. I think there's more opportunity for landholders to get better advice and technical support in regards to these market-based mechanisms. They're a bit confused. I mean, it's a complex beast. They probably need more advice and technical support. The challenges for them, lack of awareness of offset policies and landholder benefits. They just don't understand them. They're confusing. They're not communicated very well. It's difficult for us to understand them sometimes, so people out there on the ground who don't understand them at all have a big challenge. The complexity of legally securing land for conservation purposes and understanding what in perpetuity means, as Philip talked about. People don't really understand that's forever. That actually in theory means forever. I had a landholder recently who was entering into an offset agreement, conservation agreement, and we'd discussed the idea that the management would be paid for about 15 years, and she thought at that point that's when all the obligation ended and it finished. Even though I had had discussions with her that it goes on title and it is forever, but she just didn't understand that she couldn't ever clear that vegetation. Not that she should be able to, but she wouldn't ever have that opportunity. So that's a big challenge for them to overcome. And also managing the integration of production with nature conservation. So that's where things like nature refuge programs are really important because they allow for some sustainable practices as well as doing conservation. So first of all, I wanted to talk about the benefits for private investors and what we're seeing working with all of these proponents who have either a regulatory environmental offset requirement or they've decided to participate in the voluntary and carbon market for whatever reason. So obviously the biggest one in terms of a regulated market is that they meet their regulatory requirements, and we're finding that probably 80% of our clients are coming to see us because they have a regulation to do so. They have an offset requirement that they have to fulfil. Sorry. I'll do that in the end. So that's the big one, is that they've got an offset requirement to fulfil to enable their development to proceed, and so they're coming to see us. But we are also seeing private investors coming to see us to fulfil voluntary projects for a number of different reasons. So it's projects with environmental and social co-benefits that they might be able to use for corporate social responsibility benefits, marketing, promotional needs, or also to contribute to climate change mitigation and to be seen as responsible corporations, and that they're actually taking steps before they have to meet those mitigation requirements. Some of the challenges that we find for private investors, the biggest one is time. It takes a long time to secure an offset. We usually tell our proponents about 12 months. You should think about 12 months to actually get the offset on the ground, get it secured. But then beyond that, you're looking at management for 5, 10, 15, 20 years. So time is massive. It's a huge commitment for them to enter into. And this is where I guess I see the opportunity of offset payments as becoming a really positive potential, in that they get to make a payment to a fund and then they get to proceed with their development, and we can ensure that the environmental benefits are achieved through those offset payments, but they don't have to go through this lengthy process of securing environmental offsets, which is not their business anyway. The next biggest challenge for private investors is cost. Offsets are not cheap at all, and we are finding when we talk to people that they would be prepared to pay more to do an offset payment than to actually have to do a direct offset, because of the level of investment that they have to have in terms of other resources doing a direct offset. Another big challenge for private investors is policy uncertainty. So offset policies in Queensland, I know, I can't speak for any other state, are quite ambiguous in their requirements and change over time. What we find is that there's often a policy behind the policy that nobody actually knows about. So we might find an offset to fulfil somebody's offset requirements, get to the point of submitting to the regulators, and then there's this whole list of other conditions that were required to be met which aren't actually in the policy. And we're finding that increasingly, and it's quite disturbing. And we've actually said to some of the departments that they need to be really careful about that, because one day one of these companies is going to take them to court and say, well, actually it's not in your policy, you can't actually do it. It's going to be quite costly for the government. Another challenge for private investors is departmental inconsistency. So the department's not speaking with one voice. So we're getting a range of different advice and guidance from different departments, and it's conflicting quite often. So that makes it difficult for us to meet their requirements. And another one, the big one, is a loss of focus on environmental outcomes. So we often find that people can get bogged down in the weight of the policy and just ticking every single box to make sure that the offset meets all of those requirements, but failing to see the bigger environmental picture. And that's, again, where offset payments might be of benefit. I find this is a really interesting example of the integration of carbon offsets, biodiversity offsets, and private investment. So I've been working with an LNG company in central Queensland who are captured by the Commonwealth Government and the state government for environmental offset requirements, and they will also be captured for carbon requirements as well. And they're looking at ways to kind of integrate those offset requirements so that they can meet all of their approval requirements in the first place, also improve the environmental outcomes and to make it more cost effective for them. So this particular project looks at integrating a carbon farming initiative project, environmental offsets, and also incorporating it with the irrigation of their coal seam water on their properties. So we're not doing the carbon farming project on top of the biodiversity offset project, but it's like, if you can think of it, I had a good picture of a mosaic of these different market-based mechanisms on the one property to achieve a number of different outcomes in a really cost-effective way. So we're working on that probably over the next 6 to 12 months to try and get that project up and running. I think it's a really good example of what the potential is for private investors to operate within environmental market services. But I think it definitely needs to be supported by regulation. They're just not going to participate in a voluntary market unless there's some really big benefits for them to do so, because it's quite expensive. And I'll leave it there. Yeah.